Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 9th, Columbus Day, so it is a bank holiday. Anyway, my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. I mentioned today is a bank holiday, so not going to have a whole lot of economic data today. So it's going to be pretty quiet, as you can probably already have seen that volumes are going to be a lot lighter than normal when those bank holidays are happening, especially here in the United States. We do see a lot less volume happening, and we are seeing that today. But on the overall markets, I wanted to mention one other thing. It is actually a light week for any economic data across the board. Friday we do get CPI and some manufacturing data out of Germany. Tomorrow FOMC minutes on Wednesday, and then several Fed governors for the FOMC are going to be speaking. So we're going to be hanging our hats on. Hopefully those guys start stirring up the market a little bit, at least for this week. And then we do have the earnings coming out for the financials. That's usually the real kickoff for the earnings season. So we'll start seeing some of those happening. And then on to the meat of the earnings happening next month. So we'll be able to start trading some of that stuff. All right. So onto the overall markets, we've got crude oil here slightly higher by about 37 cents. But the thing to really note here is it came down and touched that point of control, and the Fibonacci level bounced off of that. So almost, a tweezer bottom, if you will, on this move here. And all of those things lining up with the 50-day moving average has acted as quite the support level. I'm looking for it to start trading back up, so I've added a position in oil with the ETF that I'll talk about here in a little bit. But we got a nice little bounce here in crude oil, and I think it's going to go up there and test that $50 a barrel area probably this week. So I'm looking for a bullish trade here in a little bit. We've got gold futures up $10 on the day, despite the fact that most of the equities are in positive territory, albeit only slightly. But we've got gold futures moving higher. I've talked about this. I think it's going to go down to the 1250, but it has gotten above that 61 fib level, so might be a little early on that. I haven't added any positions, but I still think it's in this downward trend and is going to be doing the same thing that we saw with crude oil, coming down and test where all of these lines are coming together, the 50 fib level, the 200-day moving average, and the point of control. I think that's going to be a pretty big magnet. It has to go down and just play around with. Then on to the bonds. Bonds trading sideways. Again, we're going to get the FOMC minutes later on this week, on actually tomorrow. And I think bonds are going to pretty much stay right here for the foreseeable future. And I don't think that you're going to see anything that's going to make the bonds want to move up. The only direction I see the bonds moving is down, as the probabilities of interest rates increasing are going to start be more of a factor. So I think that's going to put more downward pressure on the bonds. Then we have the VIX. It is up. It's back up into the double digits, if you will, at 10. As you can see, they're up 37 cents in give or take, back into the value area, but the tens is really where it has spent the most time. It gets a little overdone to the downside. There has to be some fear when we're at all-time highs, so that's why VIX is kind of getting back into its sweet spot that we've seen, at least for the last few years, is right around that 10 area. Before, or last year I should say, but before that it was, it liked to migrate around 13 between 13 and 15. We've seen really suppressed levels for the VIX though as of lately. We've got the Dow Jones Industrial Average slightly in negative territory, but like I said, it's really not making a whole lot of a move. You'll be able to see this set up a little bit better maybe in the NASDAQ or at least in the E-mini S&Ps, but anytime we get this top right here, if we took out today's move, it looked like it was pretty toppy, but we didn't get confirmation to that. So now when you have these opposing candles like we're seeing right here between these two Fridays and today's candle, that a lot of times has a tendency to be a continuation pattern. So we still need to have that confirmed, but we did get a all-time high in the NASDAQ today. Then on to the E-mini S&Ps, hasn't created an all-time high, but it's also that similar situation, but not as obvious, I would say, of a topping pattern as we saw in the NASDAQ there. Friday's candle made it look a little bit more toppy than what we're seeing here in the E-mini S&Ps. Again, looking more along the lines of a continuation pattern here for this with these two opposing dojis there. But the E-mini S&P is just slightly in negative territory. The breakdown of the E-mini S&Ps, one could almost say, you know, it's an inside day, even though it's really this value area high is extended to the upside, but it feels very much like an inside day, especially because most of this stuff happened overnight. I suppose if I took out the overnight session, that would probably be very close to an inside day, as you can see there. That's why it feels very inside day-ish, because if you take out the overnight session, it is relatively just that. All right, then on to a couple of things that I've done. XOP, I mentioned this before, added a bullish trade in XOP, decided I'm thinking it's going to be put my money where my mouth is. I think it's going to want to migrate up to the 50 in the crude oil, which is going to cause upward pressure in the XOP, which is the ETF for the oil and gas exploration. I think that get up into that 50s, these guys start doing very well. So I added a bullish trade there, as I mentioned, and went into the November. I bought the 32 calls and sold the 35 calls to create that long call spread and paid a debit of $1.65. Did go outside of my rules for that. I'd like to keep it inside of $1.50 for that, but I'm pretty sure that we're going to go up there and test that $35 a barrel area. So that's why I set that trade up that way. You know, not thrilled with paying a little bit over it, but in a sense, I wanted the trade more than I wanted the penny. So I'm pretty sure on that directionality. So I decided to pay up a little bit. As a matter of fact, I did that XOP trade in both my IRA and in my margin account. So we're all clear there. Paid $1.65 in both of those. On to WYNN. Looks like there's bottom out here. It came down, touched the 50-day moving average. I think it's a little overdone to the downside with all of the bad news that we saw out of Vegas. People are still going there in droves. WYNN, I think, is the best casino in Vegas. I just think they have everything from attracting the older clientele to the millennials. I think that they do a very good job with their bars and everything else, and restaurants and the pools, as opposed to just the casino aspect of it. So I decided to add some bullish trades with WYNN, and I only did the WYNN trade in my margin account, but I went in there and did the October, bought the 142 calls, and then sold the 146 calls. So it's $4 wide, and I paid $1.97. So that one in line with my rules for that. I had to go into the October, as you can see. Didn't want to get really involved with this in the earnings cycle. You could do that. I'm not opposed to doing that. Just set up better for the October. I think we're going to get a bit more of a bounce here happening relatively soon. It's a tight spread. You could go out there into that earnings cycle, capture some of that volatility increase, but I thought that we might just see a real quick move, so I decided to go into the October with that trade there. Like I mentioned, only did that in my margin account. Walmart, took this off both in my IRA and in my margin account. If you remember, I had on a couple of trades in here with Walmart, I went in and did it was right around somewhere in here. Basically, I originally set this trade up. I went into the October, sold the 76 puts in there, collected 64 cents for that. And in my IRA, I had to do it as a defined risk, but I wanted to set it up like that naked strategy that I did in the margin account. So in my IRA, I defined the risk and did the October, sold the 76 puts, but then I bought the 68 puts because that was the first strike I could basically buy for a nickel in there. And I originally collected 57 cents for that trade. So I decided to take that off today and in both my IRA and in my margin account. But one more thing. Then if you remember, I put that trade on the 26th for those 76 puts in both my margin account and my IRA on the 26th, so right in here. And we got the right directionality move, but then all of a sudden we started seeing volatility continue to increase. So I decided to add a little bit more to that strategy and went in my margin account, did the October, sold the 77 puts and collected another 74 cents. So I had two trades on two different strike locations. Volatility started coming out of it, but not as much as I'd want, but I got the directional move today. So in my margin account, the 76 puts that I sold for 64 cents originally, I bought those back for 17 cents. So outside of my 50% of my max profit, but it was because of the directional move we got today, that big move there. And then the 77 puts that originally sold for 74 cents, I bought back for 26 cents. So yes, I was able to achieve more than what my profit target was on that, but that had to do with this massive move we saw in Walmart today, up almost $2 when it was up over $2 when I was able to get out of those. Now let's talk about the IRA. In the IRA, I defined that risk by buying those really far out of the money puts, right? For a nickel, it was actually 6 cents. Well, I put that trade on, I tried to get out of this trade originally, and for some reason, somebody only picked me off on one lot there, and I got out of my October 76 puts that I was short, so I bought back the 76 puts, sold back the 68 puts, and collected 18 cents for that spread. Well, I'm sitting there working this spread, and I'm watching the offer come down in those 76 puts, because remember, in my margin account, I got filled right after I did on that one lot, and I got the 76 puts for 17 cents. And so I started thinking, why am I paying 18 cents for this strategy when I could be basically writing out those long puts for free? I mean, it's only a couple of days, but anything could happen, right? So I got out of one lot naturally with the spread, so I pulled that other, the balance of my spread as a spread, and just went in and bought those 76 puts outright for 17 cents in my IRA. Now, that leaves me long those 78 puts in my IRA, which I'm fine with. You know, they're only worth a penny or two anyway, so I might as well ride those out, because anything could happen. If Walmart slams back down for some reason, those might gain in value. Of course, those 68 puts are way down here, so I don't really see that as happening, but why give those away for free to somebody? And that's why I decided to do that. I was able to get it out better than, you know, the actual spread itself, and it's kind of kicking myself when I realized that, but you know, that's what happens. Bank of America, the financials have done really well, and that has to do with the thought that the interest rates are going to increase. So, you know, I've been talking about financials doing very well, but if you look at Bank of America, really looking like it's topped out, got confirmation to the downside. We could easily see this one to come back down and trade into the value area. As you can see, they do have earnings coming up rather soon, but the implied volatility is really low. So I think that we're going to see a pretty quick spike in implied volatility. And if I can get the downward move here, I'm going to be very happy with that trade, if in fact I can get that trade executed. Right now, I'm
right there on the market, willing to give up a little bit of edge for that. But I'm trying to do the October, and I'm trying to buy the 26.5 puts, selling the 25.5 puts for about 55 cents. Have not gotten filled on that trade. Hasn't happened, but would like to see that trade happen and we come back down into the value area here, and I'll be very happy about that. I don't have a whole lot of move, but not a whole lot of days. I think I'm just going to get a little bit of move here, implied volatility spike, and try and play that, but it looks like it might be getting away from me as it just created a new low. All right, that's all I've got for you guys today. On Friday, though, we are going to do the broken wing butterfly on the put side, and it is going to eliminate all risk to the upside. So I'm going to show you how to build that strategy out, show you the right strike location, the right environment to increase your probabilities of success. I know you can go out there and figure out how to do a broken wing butterfly by reading it online, but they are not going to give you the optimum strike location for that trade, and they are not going to tell you some of the rules that I'm going to share with you that I've come up with over my years of trading, and how to keep that where the probabilities are in your favor, because you can set this thing up where you're actually increasing your risk on one side and still having risk on the other side, and I'm going to show you how to eliminate that. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.